Jose here once again. I want to just make a little update about the trade that we took before at the beginning of this week on the EURUSD on the hourly chart. We were talking about this nice opportunity to get long the EURUSD right at this level. But something interesting happened. As you can see, I was waiting like 6 hours ago to see how this candle right here, let's mark it, right here is going to perform. But as you can see, this candle just closed below this wicks, right below the level that I was supposed to get involved. So I just leave this trade because it doesn't meet my rules. My rules is if the market was here on this candle, you gotta make a signal that the market is likely to reverse, something like this. If the body of the candle is this, it should do something like this, right, retesting these levels. But as you can see, this candle makes a strong move to the downside and close below these levels. So this trade is already invalid for me. I didn't take it. So that's a little bit unfortunate because, you know, we are really excited to this trade. But hey, that's how the market plays its game. And fortunately, I just follow my rules and I didn't get involved with the bad trade with the bad decision. However, we can look for another opportunity to get long right down these levels right here. As you can see, taking into consideration a trend continuation trade and looking to the overall trend to this market, like you can see, the market is a bullish trend. The market just break this level. We have another level here that is really interesting right here. One thing that is really interesting about this level, we are in a break-even number, 1.1100. This is a break-even number, really nice psychological number. Let's take our Fibonacci extension, Fibonacci retracement from this swing low to this swing high. Boom, as you can see, it meets a minor Fibonacci level, the 50%. Let's use our Fibonacci inversion. Let's take our Fibonacci extension for make our Fibonacci inversion right here from this swing high to this swing low and back up in. As you can see, our 127 extension almost get over our possible entry level. Let's take our Fibonacci extension once again and take a Fibonacci extension from this swing high to this swing low and back down in and back up in. And unfortunately, we don't have a Fibonacci cluster involving this Fibonacci extension. The 1618 is a little bit above this level, so they don't make a lot of signals. But as you can see, with this Fibonacci extension right down here, for this Fibonacci inversion right here with a pretty nice psychological number right at structure, it creates a pretty nice level to get long once again. Let's make another measurement that I almost forgot. Let's see if it works. Let's take from here to here, copy and paste it, and yep, this is not exactly an ABCD pattern because on my rules, the ABCD pattern, at least this retracement has to touch at least the 382 of this Fibonacci retracement to A to B. But if that's not in your rules and you consider this as an ABCD pattern, as you can see, this is a nice harmonic move right and completing right at previous structure with a Fibonacci cluster and psychological number. Pretty nice place to get long. Our stop probably right on this area for me. Put this on red to stop targets. I'm gonna make some calculation about my stop, but maybe on the same place. That is just for a small idea of where is my target should be or is gonna be. I'm not exactly sure. I gotta do some measurement, but let's see what's gonna happen. Making our risk reward ratio calculation. Let's put this on red for risk. Let's copy and paste it. Hold on, let's this a little. Okay, so copy and paste it. Let's put this on green to reward, and we have 1, 2, 3, 4, almost a little bit more of 4-to-1 risk reward ratio. Pretty nice risk reward ratio. And if we look for target 2 up here, we gonna have a 1, 2, 3, 4, 5, 5.5 and to 1 risk reward ratio on this second opportunity to get long on this pair. So guys, that's all I got for now. And the first trade that we're gonna get involved is eliminated from my radar, but another trade on my radar on the same pair, same movement to the upside with a nice risk reward ratio and a lot of signals that this a lot of signals for this opportunity that makes us really, I don't know, pleasurable. So that's it for now, guys. That is just an update for the last trade that we talked before at the beginning of this week. So take care of yourself, guys. Be careful on the markets. Follow your rules.